Hello everyone, Jordan here, Hoss Collar Trading. So as we can see, this is the opening candle of the day on NQ1. I'm actually going to give y'all about 15 minutes before I really start. So let me just wait a minute. Y'all let me know when y'all are in. Just say present. Type in the chat, little thumbs up or something. Let me know you're here. Because I don't know how many people are tuned in. I have no idea. Oh, we got 3 viewers. Okay, now I see how to tell. Alright, so I have 3 people in. I'm going to wait until I get about 15-ish before I really start. And if within 5 minutes, I don't get 15, then hey, I'll just start. So I'm going to give everybody a little grace period. We've only had 1 minute. So anyways, what we're going to go over today is, of course, we're going to be looking at NQ1. I'm going to give it a little time to do something so that we can really look at it. But what we're going to be looking at, for the most part, are inside candles for QQQ. So let's go ahead. Well, let's wait. We're going to look at inside candles, and we're also going to look at daily candles, the day, here shortly as well. All right, so just going to give it a few minutes, wait till 6:05 before I really get going, so that everybody gets a chance to tune in and they don't miss anything. I know that I am recording this, but I don't want anybody to miss something important just because they tuned in a few minutes late. So just give us about 3 more minutes and we'll get started, okay guys? And I appreciate y'all that were on time. I appreciate you for being on time. Oh, and just a heads up, in case you are not aware, for those of you that are watching, tomorrow the market is closed for Memorial Day, so you're just going to have to, do your thing and get ready for Tuesday. All right? And Steven, I appreciate you as well for joining in. How long have I been trading? So I've been trading for about 3 years now. Let me rephrase. I've been trading on and off for about 5 or 6, but really serious trading about 3. And that's because of the whole pandemic and everything like that. When we got our stimulus checks, I had an extra $1,200 that I could really go ham with, and I did, and I learned a lot. So got a couple more minutes, just literally 2 more minutes, and then I'm going to get started, guys. Like I said, I just wanted to give everybody a little 5-minute grace period to join in. So and what we're going to focus on first is inside candles, and we're going to go over the VWAP and 200-day EMA strategy for Friday, and then we're going to do inside candles, and then we're going to do daily candles, and then we're going to take a look at what NQ1 exclamation point is doing. And have I been able to get rid of my 9 to 5? Absolutely. I do contract work sometimes because I enjoy it. I do some security, like camera work, where I basically catch people who do murders and burglaries and stuff like that. But that's just because it's rewarding. I feel like it gives me the ability to, help my community out. But yeah, I don't need to do it. I just do it because I enjoy it when I get a call to do it. So we got 1 more minute, guys. 1 more minute, and I'm gonna get started. And we do have we have about 20 people in here. So as soon as 6:05 hits, I'm gonna get started for y'all. Okay, guys. guys, I'm going to get started, and yes, it does work. I have it open already on this Forex, the NASDAQ mini futures. This is the opening candle for the day. So as you can see, we crossed above here. You could have gotten in calls here. Probably from here to here, I think in futures is give or take like $200 or $300 on one little contract. It's crazy, but this is one reason why I don't really mess with futures. But let's get started with this. So as you can see, we have our 200-day EMA here. And for those of you that don't know, this is how you do it. You're going to look for your Williams alligator. This is what you're going to get. You're going to click it. It's going to show up, and you're going to go ahead and screenshot this and this. So there's two strategies you can use with this, right? I haven't really talked much about this, but this is actually a good time to talk about it. The 9, 21, and 200-day EMA strategy. So what you can do is, this is your 9 EMA, this is your 21 EMA, and this is your 200-day EMA. What you're looking for is 9 and 21-day crosses to enter calls and puts. So when the 9 crosses above the 21-day EMA, as you can see here, you get in calls. When, let's see, again, calls here, get in puts. Is actually not a very good example on this time frame. Let's see. Usually use the 5-minute and 15-minute time frame. Yeah, so here is more like it, right? So you get in here, and you would have actually gotten on this drop right here, this big drop right here. But yeah, I liked using this. This was my first strategy starting out, really, was using the 9-21 crosses, and it was very good starting out, but I have since gotten rid of using the 9 and 21-day crosses and simply using my VWAP and 200-day strategy. So let me address a couple comments. Let me see. I'm glad that you like the strategy, TD Hill. Makes me very happy to read. Keep at it. Make sure that you stay consistent and don't let the money start kind of blinding you, because something that happens to a lot of people is they're profitable up to a certain point, and then their money hits a certain goal, and then they start getting really ballsy and really greedy, and for some reason they don't follow the same rules that took them to get there. Make sure you don't fall victim to that, because I fell victim to it myself. Brown JT, does the platform I trade on have anchored VWAP? I don't see that on TD Ameritrade. So no, I don't use it on TD Ameritrade. You're gonna want to get TradingView. You're gonna want to just go on there on your browser and use this site. It costs like $10 to do. What is it, like get your live quotes and stuff so that you can see the live chart. That's it. Nerd Money, to answer your question, both. You can use it for both. It's not, there's none better or worse. I just personally, like how you personally like trading SPY, I personally like trading QQQ. I trade them both, but QQQ more. Will I explain actually entering calls and puts, like what strikes to enter at and what expirations? Okay, fodder, to answer your question. When I answer calls and puts, this is a good time to go ahead and show you the VWAP. Click your VWAP, right? Boom, boom. Find your opening candle for the day. For me, that's 8:30 a.m. So, entering, when am I going to enter calls and puts? So in this example, we're opening here. We open above. I'm going to enter calls on this candle that is well above VWAP, right? We opened above, now we're well above, right? Strong movement. I'm going to enter calls. And I might have a couple chances to average down like in these two candles because of maybe theta. But what I'm going to do is I'm going to get to negate theta. This is why I do this. I'm going to get my contracts to be within 7 days minimum, like bare minimum. That's the closest I'm getting it, 7 days. Far out, I'm going to do about a month to 2 months, but I'm really going to do about 7 days to a month. That's my expiry day. Now my strike is going to be within $5. So in this example, right, say we're right here when I enter 304.10. I'm going to get within somewhere from 305 to 309. That's my strike price. And somewhere in this area here, within this price range, I'm already out with 15 or 20% because of that alone. I'm out already. All right. Explain entry. Okay. So some videos, the price crossed the VWAP, but you indicated the stock was not ready to enter. What is the difference between a stock that is ready to enter and one that is not and one that is? All right. So good question. Here is a good point to talk about. So we look for bounces off of the VWAP or breakthroughs, right? But we need to see this candle finish, and we need to see what the next one starts to do, right? So in this example, we would be in our calls, right? We would have been out already somewhere here. We'd have been waiting for another entry. And as I've talked about in a couple videos, you see these really weak candles, you know we're about to reverse. So if you really want to, you can enter puts on these weak candles because you know that's a reversal candle. And know that you're going to exit at VWAP because you don't know if you're going to break through or you're going to bounce off. So you exit and you wait. Don't broke through. You see this candle starts below and then bounces right up. Now this point here, this candle, you still don't enter your calls. This is where you enter your calls because now this candle is fully above, it bounced up, and now this candle here is now showing a stronger movement upwards, solidifying your call entry, right? So from here to here, you're already out. So this is the 5 minute. I'm using what I've been using recently has been 5, 7, and I've just found that the 7 is a little more accurate for me for what I like to do. So I've been using the 7 minute, and then I've been experimenting with a 13 minute as well, which I really like. But yes, 5 minute. Start with the 5 minute. Don't worry. So where's my stop? If I'm entering on this candle, right? This is what we're going to use, our long position. Entering here. Your stop is at the bottom of the candle, while your entry is going to be at the top of the candle. And then you're looking for 2 to 1. That's what you're looking for. Okay? So you get this to 2 to 1. Drag it on over. This is how you can determine your risk versus your profit. Okay? So based off of your entry candle, you set a basically a stop loss, or you can just simply gauge it, right? You don't have to do this. You can just literally look at it and see when your candle crosses below or above, right? And go in or out. Let's see. Would I suggest staying away from 0-day trades? Absolutely. So 15 to 20%, that it's going to depend. So first of all, stay away from 0-day trades. Do not do that. Don't even do something. I very rarely do something within 3 to 5 days. Only if I truly believe in it and I know it's going to be very quick and I want to get a little bit of a scalp in, I'll do it. But to answer LM, yes, that actually still is 15 to 20% because of the way that I pick my contracts, right? I pick longer out strikes, or not longer out strike, longer out expiration dates, closer strikes. that movement is still 15 or 20% for me. For me. Now, if you're going to do 0-day trades, you could do something like this, right? Let's see. You could say your entry's here, and you want your exit there. So see, now it's a little bit tighter, right? Now your 2-to-1 is in now your 2-to-1 is in just a couple because you're not entering. It depends on where you enter, right? So if you're gonna put this here, then you need to. It's all about your entry and basically your contract. Yes, strikes are $5 within $5. So I can pick it $1, $2, $3, $4, or $5 away. Does that make sense? And to answer your question, Bearable, you buy and sell both calls and puts. And I wanted to show y'all something. So remember how I showed y'all we were above VWAP? You could have entered your calls, and this one candle alone is about a $300 candle. For $350 now. Ridiculous. But you buy calls and puts. But the difference is when you see something that would normally be a sell, right? So this drop here, right? This is where you buy puts for the downwards. But then you sell them for your profit, and then you buy calls, and then you sell that for profit, and then you buy puts, and you sell those puts, and then you buy calls, and etc. Does that make sense? And any reason why 7-minute is more accurate, there's absolutely no other reason other than just the candles just seem to not let you get faked out. Like as you can see here, right? It seems to be a little more accurate than that to me. It just looks a little bit cleaner for me. All right, so what we're doing here, let's look at this. So like we talked about, we get in calls. We exit our calls somewhere in this area. We see this bounce. We enter calls here. This break above. We end up exiting somewhere around this area, somewhere in this area, okay? Now what we're looking for is this. We're looking for inside candles. Now let's find an inside candle. Because this is going to be a very good, big, strong movement. All right, so let's find one. Here's one right here. So what is an inside candle? An inside candle is going to be when the high and the low of the previous candle is not broken. As you can see here, this candle is not broken by this candle. But then right here, this candle breaks above this zone. Ooh, I did not make that straight. Okay, there we go. So as you can see, this candle breaks above. You enter your calls here. And in this area, this is just from here to here, right? So from here, 306 to 307. That's a dollar movement. That's a 15 to 20% move. Do I ever leave runners? Okay, hold on. Let me go back. I thought you only bought puts below VWAP and bought calls above. Yes, that's true. I was just trying to give some examples of like you buy puts on the way down and you buy calls on the way up. That's all I was trying to explain. Do I ever leave runners? Yes. So what I do, this is how I do my contract. Say I buy 10 at 15 or 20%. I'm selling 8. So 80% of my position gets sold at 15 to 20%, And that last 20% gets sold then at 25% and 35%. Or I'll hold that very last one till I see a reversal. Simple. Can I go over the 13-minute? Absolutely. Just, you already know. So the 13-minute, just for me, and it just looks super clean, right? So these candles, from my understanding, you get an even amount of candles for the day. So a lot of people use the 13-minute, and as you can see, it's very, very accurate when it comes to like the 200-day bounces. The breakthroughs are strong enough to where you can get 15-20% moves, right? Bounce directly off of it right there, right? So this is why I'm liking the 13-minute. I'm just seeing that it's very accurate in terms of like the bounces and the breakthroughs, and the candles are very like if you see a weak candle on here, right? We're going down, you see a weak candle, reverses up. So weak candles are basically showing you that it's going to be a big movement, just like on those dailies that we were talking about. It's very accurate in that sense. And yes, to answer your question, option 7 days to about 2 months out is what I'm looking at. And Jess, did I answer your I guess what you wanted me to look at? If you want me to go over something in particular with it, I'm more than happy to. But what I've noticed too is like these inside candles on the 13-minute are very accurate as well. Let me see if I can find one. So this one wouldn't be an inside candle here, which is actually good because it wasn't too strong of a movement. It was strong on the smaller time frame, but not the bigger one. So let me find a good inside candle to show you. Let's see, because that's after hours. I don't want to show an after hours. This is actually really good here. So look at this inside candle break, right? As soon as this, because this candle does break above, right? You get in your calls, and then we take off, right? So this is why I'm liking the 13-minute. It's showing me very accurate breakouts. 13-minute is just, I'm just liking it. That's literally the only reason why I like it. How much can a week out contract cost? So depending on what you're playing, it can be $300, it can be $500, it can be $700, it can be $900. Oh yeah, if you're gonna get something further out, the further out that you get it, the safer that it is, right? Because at the end of the day, if it doesn't go in your direction, theta isn't gonna eat it up. You can sell it for less of a loss because theta isn't also working in your, like, basically against you, as well as the fact that let me see how to work this. As well as the fact that if you really want to, if you have the money, you can average down on it, and basically, let me give you an example of where you would average down, right? So say you get a call, and you got your call here. You got your call. You see all this drop. Let's see. So you see this drop, all this, but then you see all this big jump up, right? Well, you have a strong feeling that you're going to go up. So you don't mind. What you do is you average down. You buy more at a lower cost. So technically you've lost money. You're buying more even though you've lost money. And then you could sell here for a win, for a big win, or you could sell way up here for a super duper win, right? It's up to you, but that's how I do things. It's all about figuring that part out. The 200-day EMA, my 200-day EMA is right here at the moment. And remember, you're doing it on the alligator. So daily candles. Let's talk about daily candles. Oh, wow. All right. So I did a video on this on TikTok, but let's talk about it on here. So where do you put your VWAP on the 1 day daily candle time frame? Does anybody know? Does anybody remember? I'll give you 5 seconds to type it. If you don't know it, I'll say it in 5 seconds. 5, 4, 3, 2, 1. Opening, yes, normally opening is correct. So opening is correct on your 5-minute, 7-minute, 13-minute, 15-minute, basically anything under the day. Steven got it correct. So TD Hill got it correct. So beginning of the month, when it's ooh, messed up here. Hold on 1 second. So yes, whenever you're going to do this big time frame like this, you're going to do it on the first candle of the month. So for this one, let's go to May, is May 2nd. Then we have April 1st, and then we can do March as well, so that you can see March 1st. All right, so let's see. Let's start with May, and we'll go from here, right? And we'll delete them as we go. So, and sometimes the previous one, the one from the previous month, you should actually keep it because it will act as a resistance point, as you can see here, double on top of the 200-day EMA. So here we see this candle opening above VWAP, and if you wanted to take contracts that you didn't want to day trade on, so you didn't want to buy and sell in the same day, this is going to be the time frame that you're going to want to do. So sometimes, yes, you will trade it in the same day that you buy it, but more often than not, you will trade it the next day or the very following day after that, within the same week, but not the same day most of the time. So you see this candle, this is going to take the entire day to open above, right? So at the end of the day, you see it's a good candle, it's above, you're waiting for this candle. You see it's weak, but it's still above. You enter your calls because it's showing that it's going to be a big move. And you know that you're bouncing off of VWAP here. This is why it was weak, because you bounced off of VWAP and then bounced back up, and it created a weak candle, but it's because you bounced down and straight back up. So you enter your calls, right? Now here, this next day, basically what you're gonna do is you can either enter your calls this day, or you can wait and set your entry to be right above where this candle was. So right here at 322.13, you enter your calls, okay? Now, boom. You go all the way up to 329, 330. That's like a 50, 60, 70% move. You would have been well out in this area. But what you'd also, if you noticed, if you're an all-star, you'll notice that we also go below this candle. So you enter puts as well. Because what ends up happening is you can enter both. The break doesn't matter which way, you can enter both. Hold those puts, because we're bouncing off of VWAP, right? So my suggestion, and this is what I did on this day, actually, this is exactly what I did on this day. I got in calls on the break above, and expecting the bounce off of this area, I got in puts somewhere in this area, and I actually averaged down on these $3. And the very next day, we broke below and this, and I actually got out on this day. I got out on this day somewhere like right here, like literally at the VWAP smack. I got out because that was a, for me, that was a $10, $15 move. I was good, right? So what we're looking for on the daily is we're looking for weak candles, weak candle, weak candle, weak candle, weak candle. This could be considered a weak candle and also a bounce off of the 200-day EMA. Weak candle, weak candle, weak candle. Now, what does the weak candle suggest? The weak candle suggests a big move the next day or several days. So what you're going to do is you're going to wait for the direction to show itself on that day because it's going to be volatile, and then you're going to get in that move. That's literally it. So in this example, right, what happened was the majority of the day we went down. And from here, just to show you, 287 all the way to 280. That's a $7 or $8 move in one day down and then back up to 293. That's super volatile. That's a lot of money to be made in one day. And this candle told you in advance that it was going to happen. This candle told you in advance that a 293 to 285, almost a $10 move was happening. This candle, bounce off of VWAP plus it being weak, told you in advance that a 302 to 290, a $12 move was coming the next day. This candle showed you that a 313, 330 move, an $18, you know what I mean? That it showed you that was happening the next day by being a super weak candle. Does that make sense, guys? And also, adversely, on a daily, if you ever see inside candles on the daily, they're going to be massive moves. Massive moves. So as you can see here, right? This is an inside day. Got to pay attention to VWAP, right? So inside day, you enter here, 302 to 306. This is a $4 move that you get in, and you expect the bounce off of VWAP. Boom, back down. Which then nets you 306 all the way to 290. I mean, come on, guys. Super easy. So what time do I enter a call? What time at open? I'm not going to enter at open most often than not. I'm going to enter within 30 minutes of open, but I'm not going to enter right at open. Never. Never, ever, ever. Do not enter at open. It's just the silliest thing that you can do. So let's take these off. All right, so all right, so like I said in this example, right? This was the first candle of the day. I didn't get in it. I got in here. I got in the next candle, which was a solid candle. So yeah, I got in about within 10 minutes, 10 or 15 minutes, but I didn't get in right away. So let me tell you the time frame. So 5 minute, 7 minute, both day trades. 13 minute, you can do for day trades as well as swings, but I would beware of the swings. I would stick with day trades as well. They're just going to be more lengthy day trades, as in I'm not going to buy it and sell it within an hour. I might buy it and sell it by the end of the day. And then the daily, so if you're going to do like the 30-minute time frame, this one's going to be more swinging several days or swinging the entire day, at least the entire day. Daily is going to be day to day, okay? Does that help? Does anybody have any questions right now? Let me see. Because I've kind of gotten over the inside candles and kind of like how they work. I've gone over, the daily candles and how they work, and how you should definitely look for inside candles on the daily chart as well. Gone over the VWAP today. We kind of did this pretty quick. Let's see. What are we expecting with the current break in VWAP on the daily chart? Let's take a look. So let me go back to the first of the month. All right, so what are we expecting? So we just broke above, right? Now, last time we broke above, we bounced off of 200-day EMA, give or take, right? So my expectation is one of two things. And it really depends on this next candle, right? So we're waiting to see how this next candle behaves. But if we see it go like this, then we know we're going towards the 200-day EMA. If we see it stay flat and stay here, then what that is called is a tweezer top. And I'll show you what a tweezer top is. Let's see if I can show you something. Like this. See how these are relatively the same? And then it goes down. Let's see. Relatively the same after going down, then we go up, right? These are tweezer bottoms. Again, relatively the same, we go down. So that's kind of what that means. Also, you see this right here is usually means that there's going to be a break one way or the other. Be ready for it, because it means basically if we're approaching the 200-day EMA, it's probably going to break through. It's not going to bounce off. It's going to break through, because we had several candles back to back that were almost inside day candles, not quite inside day, but they were very close to being inside day. They were just very, very consolidation type days, right, for a big move down. So what I'm expecting is this. Personally, what I'm expecting is for us to form a double top of some sort, basically kind of how this happened, right? We broke above, next candle broke down, and then we went down. So I'm expecting something like this, somewhere in here. That's just what I'm expecting. We could very well do this. Pop to around 220, 230, and then the rest of June go here. I think the bottom of QQQ is somewhere in this area, personally. I think it's somewhere in here, 260, 240, in that range. I won't be really bullish on QQQ until it hits that range, because we just started a recession, and it's, by all estimates, going to be worse than the 2008. So where people are guessing that the NASDAQ and SPY and shit are going to go down like 50% from their high points. So, you know, I don't know how much I trust that outlook, but I mean, 30% is not unheard of. So, yeah, S&P too is like 45%. When would be a good time to enter a long put swing? Looking for one, say, over a week long hold. That's a good question. So a breakthrough VWAP, for example, right? So this takes several days to get to here. So if you would have got in here at the break, through the 200-day EMA, right? Because I'm gonna use every example breaking through. I'm gonna use this one. I'm going to use the bounce off, and then I'm going to use this one as well. I'll even use this one. So this might take 2 days, but from this break to here, you would have been out already. And then this break above, back up again, you would have been, you know what I mean? But here, so you break down, right? You get in. This might take 2 days. You might say, hey, you know what, I'm going to trust this bounce off of the 200, average back down, get in luck, boom, right? I wouldn't do that personally. I would have been out already on the next day, because that's from here to here is $10. That's enough. But it's the best way to explain this is, no matter how long you think you want to hold something, it doesn't fucking matter how long you want to hold it. What matters is what this tells you what to do. Right? If your stuff hits 15 or 20%, hits your goal, you're out. You're just looking for your next entry. It doesn't matter that it's continuing. It doesn't matter. So understand that. you enter with goals, with profit stops and stop losses or average down points in mind already. You have them ready to go, you have them set, and you follow them every time to a T. If you don't do that, you're going to get fucked. My goal, so what I found over the course of a few years is this. If you take 10 to 20% consistently every single time, you will be successful. You aim for more, you're liable for it to turn around. As a matter of fact, if you aim for 10% every single time, literally just 10%, just take your 10%. I promise you, if you follow this strategy, you'll win literally 8 out of 10 trades. You would, and excuse me for saying this, I don't offend anybody. You'd have to be retarded not to be able to do it. It's super easy to follow along. You take 10%, every single break, every single one of these breaks offers you a 10% profit take. No matter what, it offers you a 10% profit take. If you can't take 10%, it's your fault, right? And if you put forth on every trade, so if you see this 3 times a day, so let's go back to the 7 minute, for example, right? So let's go back to the 7 minute. You see 7 examples or 3 examples where you can get in. So this is 1, this is 2, inside candle was 3, and if you remember your drawing ranges, right? You see a channel, you see several highs, you see several lows, you draw a channel and you wait for the break, you get another entry here for the end of the day, right? So you can take 10%. If you do 10%, you're good. How do you choose between time frames, and why would it matter 5, 7, 13 daily? So for me, the 5 and 7, I basically replaced the 5 with the 7. Okay, 13 minute is my seeing for the bigger trend for the day, right? So this allows me a better entry potentially, but this lets me not get faked out. The daily is just for swings. That's it. That's how I'm deciding. How often would I consider doing live trading to give real-time teachings? I do them every Sunday. I'm going to do it every Sunday. I'm going to be here 6 p.m. Central. I will be here for y'all. For at least an hour, I will be here every Sunday for you guys. And this is free every Sunday. Everything that I do on TikTok and everything I do on here is free. We also, if you want more live trading, and this is no obligation, don't feel like you have to do it. We do have a Discord group, myself and my partner Logan, where we do live trading and we do all that stuff and we teach and blah, 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 all day long while the market's going, and we answer questions. So if you want more, feel free to join that. If not, then enjoy the free content and grow that way. I'm going to be here for you. And ask questions. I'll still answer your questions. Just because you're not in the Discord group does not mean that I won't answer your questions, right? This is what this stuff is for. What's a good stop loss if a trade turns on you? For me, so if I'm taking 10 to 20%, right, I'm gonna have about a 25 or 30% stop loss. And the reason why is because sometimes, and you'll notice this, and this is just my personal, what I like, is I've seen something turn on me to 15, 20, up to 30%, and then go my way again and me be profitable. Okay? Jess is actually part of the Discord group. I appreciate you talking about it and letting them know that it's worth it. We love being in there. If you are on the TikTok, my Discord group is the link is in the profile if you need it. I will post it here for you guys if you want. Again, don't feel obligated. If you want to join, I appreciate you joining us and the support, and we're again here for you. see if I can get it. There it goes. If you'd like to join, that's it right there. Let me see. Beach Bum, let me answer what you said. Been watching your vids lately. Good info. My biggest issue is holding for more gains than watching it go red. So Beach Bum, this will be what I was talking about earlier is going to help you a lot. If you just turn around after you buy something, if you turn around and you set your sell order for 15%, 10, 15%, literally right after, it doesn't matter if you just bought it, turn around, set your sell order in, and stop looking at it. That's it. When it sells, it sells. You secured your profit. Don't worry if it goes 1,000%. Does not matter. You secured your money. Good for you. You can get in something else later. Okay? Because out of the 10 times, 2 of them will go 1,000%. 8 of them will go negative 80% after, right? So just secure your bag, right? That's what I preach all day long. Secure your bag. What percent of my trading account do I use? 2 to 5% is super low. But I use about maximum 30%. If I super believe in a play, I will literally average down upwards to like 75% of my portfolio. If I really, 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 really believe in it, like super conviction in the play, I will do 70% of my portfolio. No questions asked. But on a normal basis, about 20%, 30%. That's what I'm doing. On the Discord, do we do live trades? Yes, we do live trades. We do live trades. We do call outs like type out call outs where we call our entry and our average downs, exits, whether it's a profit or a loss. We do the live trade where like my partner Logan does the live trading all day long. And if he's busy, he warns you in advance and lets you know he's not going to be on. So we're good. And he's honestly a better teacher than I am. So if you want to learn, I definitely recommend it. If you want to learn from us, you can definitely join up. So you have an 8 to 5. Seems really good. Do not have to baby a trade, correct? Yes, this is good, especially if you use the day chart, the daily chart that we talked about. That'll be very, very, very helpful for you. What brokerage do I trade in? I'm trading with TD Ameritrade and Webull. If you're starting out, I highly suggest using a Webull cash account. If you guys want, I can post a link to download Webull, and if you use it, you can get free stocks, like $30 worth of free stocks. If you want, I can do that too. Let me know. But make sure it's a cash account. Then if it closes on its own, I just look for another entry later in the day. Yep. Do I ever get out before the stop is hit? I have before, yes. I have gotten out before a stop is hit if I can see the direction turning on me, obvious, right? So say the stop, just say for example, I was in this, right? And I see this candle go above VWAP, but my stop isn't hit. I'm gonna go ahead and get out because that's also a stopping point for me. On the day chart, is it still a 1 week out expiration? No. Get about 2 weeks to a month. Do not get 1 week. Do you chart stocks on certain time frames, then trade based off of that and other time frames? So for me, I'm gonna I will toggle from different time frames. I will go from 7-minute look at it to 13-minute look at it, 5-minute look at it. I'm looking at all this shit, right? I want to see different candle patterns. This might show me an inside candle that can show me a break on this chart before it actually happens. That might show me a break on this chart before it happens, right? It's like an inception type thing. It all works together. They're all gears that work together. And so let me see. This weak candle here might not look as weak on, see, you can't even see it here, right? but it showed that breakdown before this broke down. So something to be aware of, that these quicker time frames can show you something that will happen in a bigger time frame that you might not necessarily have seen or gotten in or noticed in advance. Does anyone else have any questions? I'm enjoying answering these for y'all. This is one big reason why I do this, so that you guys that have the questions on TikTok can come on here and ask them in person so that I can answer them live for you. And remember how we talked about getting in calls on futures based off of the VWAP break? I want to show y'all something. We've gone, so we talked about it here. This is where it was when we talked about it, but it broke above. This is where we would have gotten in our calls, right? And if anyone knows the answer why, tell me before I repeat why. Why would we have gotten in calls here versus this or this or this? Why would we have gotten it here? Yes. So good answers. So as you can see here, we did break above VWAP, but we were weak, right? But here is a stronger candle. We stayed above. We're good. Followed by a weak candle, but still above. So we're good. So one of these two candles, you could have entered your calls. And from here, look at this. This is 12.714 to 12.757. That's like a $700 move in terms of futures if you would have got a future. And yes, weak indecision candle. So there's a few reasons why we would have gotten in, and they would have basically all worked together to give you that entry, right? And to answer your question, Aztec Warrior, I don't know why I said that weird. Yeah, I'm happy to help you out. I actually do not use Thinkorswim, but I know a lot of people do, and you can, if I remember correctly, I think you can use VWAP and whatnot on Thinkorswim. They have very good charting on Thinkorswim. I just personally don't use it because I already have a TD Ameritrade account, and I just never got around to it. But from what I hear about Thinkorswim, it's a great platform. It's a great platform. Aztec Warrior, please, feel free to ask your question about your option. I'm happy to help you. At least rephrase. I can give you my opinion on what I would do in your situation. If that helps you, I'm happy to be able to do that. And if it doesn't help you, I'm sorry that it does not help. All right. So on TD Ameritrade. To answer this before I read what you said, Warrior, that's where I actually started with that 9/21 200-day EMA strategy that I mentioned at the beginning of this stream. That was how I started. So you can add certain indicators on TD Ameritrade, but they're very limited. Okay, so to answer you, So I am currently stuck on a swing and not sure what I should do. Would you be willing to walk me through my options? I have 15 contracts on SPY puts. They are $400 strike, expiration 6/24, cost 10.80. Currently down about 47%. Have more funds to put in, just not sure what to do. All right. This is a great question because I'm actually in a same scenario because I really, really believe that we're going to go down. And I'm in the same scenario in terms of QQQ. So I'm actually very happy to answer your question and show you something. So let's go to our daily chart. And remember, QQQ and SPY are going to look very similar. So I'm just going to show you QQQ because this is something that I'm actively already looking at. So if you really look at this, all this looks like, to me anyway, is a flag, right? So for me, what I'm gonna do, and this is because I can see this here, like so, I'm gonna set me a range. And if I break out of this range, if I break upwards, I'm gonna expect a bounce off of this VWAP, or this 200-day EMA, right? So what I would recommend is this. If you're expecting this bounce off of the 200-day EMA, if we break out of this range, I'm gonna average down here. Or take my loss at the break and re-enter here. There's your two options, okay? Now, for me, what I'm gonna do is if we break up, I'm just gonna wait and I'm gonna average down. And when I say average down, I mean I'm gonna throw almost my entire portfolio into the puts here at this breakdown. Right at this bounce. That's what I'm expecting. I'm expecting a bounce, and we're gonna get fucked. From here, we're gonna get fucked, like fucked down. All right. So that's what I'm gonna do. Whether I'm down 90%, whatever, I will put down the rest of my portfolio into this. And they will go to such a point where my portfolio will then end up being from 50% down to, 60% up on those puts. That's just what I'm gonna do. If that works out for me. If not, let me put it to you this way. Can you risk that money that you have? That's 40, that last 53%, right? Can you risk it? If you can risk it, then just hold on to it and average down. If you can't, let it go and re-enter. If you really need, if that money is like, bro, if I lose this shit, I'm going to slit my wrist tonight. Just take the L, brother. Just take it. Just take the L. You can get in it. You can get in something else. You can make the money on that. You can literally make the money on the way up to this and then get back in on the way down, right? There's no reason you have to hold it. But for me, it's not gonna hurt me. I'm not gonna cry about it on that way up if I lose that money, because I know on the way down I'm just gonna make more back. I'm gonna make it back and then some. It doesn't hurt me any. It doesn't bother me that I'm missing out on that upward movement, right? So yeah. And yeah, if I were you, depending on how long it takes us to get this, right, I would just stick with the same expiration, or I would get July. So that's always going to be the safer bet. Gonzulab. That's always going to be the best bet, is to just take your L and re-enter later. That's always going to be your safer bet, because you're not risking losing more, right? If it goes back in the opposite direction, it continues that way. But if it does go back in your direction, this is the cool part. So say Tuesday, we open and we start dropping, we start falling. You can mitigate that loss that you have and just take a smaller loss or get out even and then enter something else. Oh, trust me, bro. So I've been, and I'm very transparent with how I do things. So I have a small account that I've been growing for the past month and a half, since the very end of April, it's the very last week of April. And I started with $250 just to see what I could do, right? Just so I could show you guys what's capable. I built it all the way up to $6,200 from the end of, not last week, but the week prior. And then this week, from averaging down and having conviction on these QQQ puts that I have, it's now down to $2,200. And as shitty as that sounds, I'm not worried about it. And the reason why is because I really truly believe when we drop, it's going to be so dirty that that account will hit 10K like within 3 days. You get what I'm saying? So it doesn't bother me like seeing that, because I've been around the block long enough to know that that's exactly how they do things. That's exactly how the market moves on you. It'll go one way just to, and yes, I'm going to still hold my puts. Personally, I'm going to, because for me, I don't trust this upwards movement. Like all this, I don't even trust that we can break really out of this. Like even if we broke out of this range, I could just see it dropping, like literally just straight down after. And even more so, right? If this channel is true, this is the top. And now we're going back. Now we're going to go down to 260. Now we're breaking our way downtown, right? So for me, it's okay. For my expiration on my puts is 617. So you actually have a better expiration than I do. But I mean, hey, I've been averaging down. So my stuff is like, every 20% that it goes down, I then average it down to where I was down 5%. So here you go. Best thing. So best tip I can give you. Let's look at this. Small account. See QQQ? Fuck QQQ. Play these two. Star these right here. Look them up. TQQQ, SQQQ. Put them in your watch list, whatever you need, right? Whenever QQQ goes up, TQQQ goes up. Buy shares. Stop worrying about options. You don't need options until you hit a certain point, okay? Screw the options. Don't worry about options, all right? Get shares. Buy as many shares as you can handle. When you see QQQ going up, you buy shares of this, okay? You're going to sell, every time you buy, you're going to sell for 2 to 5%. When QQQ goes down, peep this, all right? Pay attention now. This and this are polar opposites, right? So when QQQ goes down, you buy SQQQ because it goes up. When, oh my gosh, when TQQQ goes down, SQQQ goes up, right? So basically, whenever you sell TQQQ, you buy SQQQ, and then you just keep flipping back and forth for 2 to 5%. Back and forth. Yep. Super easy. This is the best strategy that I can recommend to a small account. Stop worrying about options. You don't need options. Options are for when you get more advanced, when you have a couple $1,000s, a few $1,000s, whatever, and you're starting to try and make a 30% on like $100, $200, $300 at a time. Okay? If you really and I mean this wholeheartedly, if you really just want to be consistent, you just want to make some side money on top of your job, and you want to just kind of grow some retirement money, play QQQ, SQQQ, and TQQQ, and rinse and repeat for 2 to 5% over and over and over again, and you're good. And you can grow, like say you're using your 401k that has $100,000 in it. You can grow that like 5 to 10% a week doing this. Imagine being able to grow your retirement 5 to 10% a week. Because you're fiddling around on your computer while working, day trading it, you know what I mean? Or whatever. Like, that's how I'm not even 30 and I was able to not work anymore, right? That's how I'm able to do it. Because of stuff like this. So this is why I'm sharing this stuff with you guys, because it's ridiculous how little financial literacy they teach us. and how you have to learn all this stuff on your own. I want to be that person for you guys, right? There's no reason that, like, it doesn't take away from me to teach you. It doesn't take away from me that you know it. So I'm happy to show you. So on QQQ, my moving average shows to be at the 75.45. That is well below VWAP, your current charge. So there's possibly two things that are wrong. Options 1, 2, 3, 4. You're not paying for live feed. I'm paying for live feed, so I get the candles live. So your candles might look a little different, as well as I have extended day on. You may have it on regular trading hours, so it's going to look different. I like extended because it shows me everything. So when you say you risk 30% of your account, that means you might lose 3K on 10. No, that means I'm putting up 3K, but I'm only risking, remember, I'm only risking 30% of that 3K because that's my stop loss. And then I'm also only risking 3K to make 15 or 20%. See? So I'm risking that 3K to make me, I'm not really risking 3K. I'm putting up 3K, but only risking X amount of it. Does that make sense? X amount. So remember I said my stop loss, I set at 30%. I set at around 20 to 30%, right? So if I'm going to put up 3K out of my 10K, I'm still only risking 20 to 30% of that 3K to only make, remember, I'm only risking it to make 15 or 20% as well. So I'm risking 20 to 30% of my 3K to make 15 or 20% on that 3K. But I'm not risking the entire 3K. It's the way I did 3% daily was I set a goal, right? So I remember that calculator that on TikTok that I showed, right? So I made a goal. It showed me how much I needed to make daily. I used this strategy. I only got in on setups that I knew were successful. So VWAP breaks, VWAP bounces, 200-day EMA breaks, 200-day bounces, inside candles, and daily candle, whether it was a week candle or a daily inside candle. I only got stuff that I knew was successful. If it wasn't something I knew was going to be successful, I ignored it. I didn't chase it, didn't care. And then all I did was I consistently risked my 30% of my portfolio to make 15 or 20%, give or take 3 times a day. And that made my portfolio go about 3. To be honest with you, I was making more than 3% a day. I was making give or take about 5 to 10% a day. And I didn't do it for 253 days. I did it for about, I was on day before this last week, I was on day 137. I actually kept count, 137. So, and I managed to grow consistently 3% or more, mostly more a day. And that's how I was able to do it. Just by consistently taking my profits. And then when I trusted a move, I averaged down, I didn't take a loss. So with the strategy with TQQQ and SQQQ, I can do this with, you can trade anything with you can trade with a 401k or a Roth IRA or what have you. You can trade with all of that. But the thing is you can't pull that money out. So the money that you trade with, right, is untaxable as long as you don't pull it out. And it works towards your retirement. Yes, I did record this session this time. I managed to figure it out. So this session is recorded for YouTube. I'm actually about to hop off. I have a friend who drove in from San Antonio. I live in Houston, and he's waiting outside for me to finish up. And that's about a 3.5 hour drive. So I am about to finish this up. If you guys are interested in joining the Discord group, I posted the link above a little earlier. Again, don't feel obligated. We are going to do this every single weekend. I'm gonna be here for you guys every Sunday, 6 p.m. Central. I'm gonna be here and do this for you. Record it, put it on YouTube. I'm also going to continue to release free content and show you guys how to do stuff on TikTok. So, look for me there. I'm here for you. As always, love you guys. Thank you for joining. Have a good evening.